You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. Thank you. Yesterday we have 200 likes. And the deal was, whenever we get over 150 likes, we're gonna do a free trade. So I don't think we're gonna have any trouble getting over 150 likes. 50% of us that were live yesterday gave a like. We're on our way to 100% of all active participants. So guys, thank you, awesome. I am gonna keep delivering you trades as long as you guys keep delivering those likes. So I think that's a pretty fair trade, a win-win for both of us. So thank you very much. Let's talk about the government shutdown. Government shutdown, throughout my career, and I've been doing this since 1997, has been a bunch of hogwash, a bunch of nonsense. Government shutdowns, the market doesn't care. It's more political than it is to really influence the market. The one thing I am mildly concerned about is there going to be a government shutdown and then they're not going to deliver Friday's non-farm payroll report? I don't like that. That is certainly volatility inducing. I do not think that's going to happen. But if that did happen, that is not very good. That's going to put a lot of uncertainty in the market. And then full disclosure for everybody, today we're going to be talking about biotechs, but in our advanced notice service yesterday, we did put on a QQQ put trade to protect ourselves from a big downdraft because of a government shutdown or from non-farm payroll this Friday. The biggest number of every month is non-farm payroll, the unemployment report that's released every Friday. So just so you guys know, we did share a trade with our advanced notice community yesterday to hedge our accounts in case the market does fall. But today, we're going to talk about biotechs. I'm really looking forward to this one. Let's go to the screen, and I do have a free trade for you. That free trade is going to be a biotech trade. So here we go. Okay, screen share here. I got the questions up. If you guys have questions at all, just joined advanced notice. Yosi Kaga. I might have pronounced I'm sure I pronounced your name wrong, but thank you, welcome. That is awesome to hear. We have someone else who just joined as well. Keem Yu. Good morning, everyone. Right away, I noticed a new member. I think I know everybody who's in the Discord. Like, hey, new member, newish. I've been a member for a few months, learning the strategy and listening, trying to participate here more. Heck yeah, welcome, glad to hear. How's the learning curve? This is my concern because it does take a few weeks to get comfortable. So how's the learning curve? Thanks. Yeah, they are. I've been catching up on YouTube videos. I love the approach you take, and the explanations gave me the understanding and the confidence to try option trading. I've had a few wins so far. Love that. So Kimu, welcome to the community. I wanted to share that because so many get intimidated by options. You don't need options experience. We want to simplify options for you as much as possible. Okay, guys. So let me start with option skew because skew matters a lot when you're talking about biotechs. So option skew, just got a phone call from my kid, excuse me. I won't take that while we're live. So option skew, you guys can read this, I'm going to explain it. Option skew is just, are the calls more expensive or are the puts more expensive? That's it, okay? If a stock is at $10, okay, the $5 puts, let's say those are for $1. But let's say the $20 calls are trading for $10. That is massive, massive call skew. The market is telling us that there's a higher probability of a stock going higher than going lower. So that's option skew. And we could have skew, either negative skew in our puts, where puts are more expensive, or forward skew, positive skew, going back to that last example, when the calls are more expensive. Now, Here's a fun little fact. What do you guys think are the two most popular option strategies in the world? Overall, guys, what are the two most popular option strategies? Think about it. I'm going to give you the answer. The number one is buying puts for downside protection. Retail loves to buy puts. Laura, you're right. Retail loves to buy puts to protect their account. So market makers are going to make puts expensive. Retail also loves to do covered calls. They love to buy stock and sell upside calls. So market makers know this. So we're going to make those upside calls cheap. We're going to make the downside puts expensive because we know that's what you're ideally looking to do. That naturally is putting skew into the market where the downside is more expensive than the upside. Okay? That happens because of covered calls, and that happens because retail likes to buy puts, right? Every industry, generally speaking, has more expensive puts than calls. The only industry that does not are biotechs. Why? Because retail wants to play for the next biotech to double in price. And that's why options are priced like that. So what I did a bunch of research for you. And here are the 5 most advanced biotechs using AI. Number 1, RX, Recursion, full stack AI. It merged with a company called Excentia. Then we have something called Tempest AI, oncology data plus AI foundational models. Moderna, ABSI, generative AI antibodies, partnered already with AstraZeneca and NVIDIA. And then finally, a company called Schrodinger Physics plus AI platform, and they have a long-term Novartis deal. So these are the 5 most advanced biotechs that are using AI. The next thing that I want to share with you, and I wrote it on the board back here, are PDUFA dates. Here are PDUFA dates. A PDUFA date is when a company goes in front of the FDA and then they get the feedback on their drug. You guys could take a screenshot of this or watch it back. I encourage you to do that. GSK, Sandix, CYTK, AQST, DNLI. Here's the PDUFA date. These are the dates that these stocks are going to move. For instance, SNDX, October 25th. Upside is about 100 to 200%, and the downside is maybe 50 to 75%. These are names that we're going to be covering in our community. But if we look at Sandex, you'll notice PDUFA date October 25th. So what expiration would that put us in? Not October. That would put us in the November expiration because options expire on the 3rd Friday of every month. Look at the 15s. 15s right here. If we go to the 10s, $5 lower, there's no bid. These are worth about a dime, right? But if we go $5 higher, that's skew. The options market is skewing SNDX to trade higher. Guys, can I get a why? Does that make sense? In the free trade today, I'm going to share a biotech trade with you, but I need you to understand skew. I need you to understand the pricing of these before I share a trade with you. Okay? This will translate into the trade that I share. The most important thing is trading 15.50. If you go $3 lower, it's trading 50 cent mid-market. $3 higher, it's trading 3 times the price. These markets are being skewed to trade higher. SNDX. It's going to be important when we share the trade. So you can do that for all these different names. We'll be doing that in the community as well. And we have all these names going out to the end of 2026. Here are the other names that we expect to move. RGNX. BMY, I got to tell you, I have not shared a trade on this, but I love BMY for a long-term hold. It is in the mud. It has gotten absolutely kicked, just destroyed. This is not the trade that I'm going to share, but I do love BMY. I have not shared a trade yet in BMY. LNTH, MRK, and then GRCT. These are the names that we expect to move after the PDUFA dates in 2026. And those are what we're going to follow to look for really cool option trades. Now, I think you guys have been waiting for this moment when we actually share a trade. Yesterday or Monday's video, we got 200 likes. It's going to be no problem getting up to 150 likes. Everybody like, subscribe, and here we go again. The 8th day in a row of free trade. The US government has invested in 2 biotechs. US government has invested in 2 biotechs. We've been following the story. We were long MP when the government invested $400 million, when the DoD came and invested. The government invested in Intel. The government's been making plays in rare earth minerals. The government's now making plays in biotech. The government's invested in 2 biotechs. One, I'm going to share with you guys. The other one, we're going to share with the community. One of them is going to be Tempest AI. Tempest AI, if I go back here, we shared Tempest here, oncology data, AI foundational models, rapid revenue growth, and also the US government has also invested in TEM. These trades that the government has backing have been the story of 2025. They've been phenomenal. They've been extremely reliable. So let's look at TEM. You guys probably noticed that I don't pull up charts before I recommend the trades because I don't recommend trades based upon charts. Here's what TEM looks like. These are just the expected move. That's how option market makers, there should be resistance and support at these key levels. But overall, this is what TEM looks like. You can argue for higher highs and higher lows. If technicians are looking for a reason to like the stock, I don't need technical analysis to like this stock. Here's what I'm thinking. I hate December options. I don't like December options. TEM is extremely investable. I love TEM. I like the stock. I like the leaps. What I like more is because there is skew, right? We talked about skew. Let's look at that skew. Stock's at 79. So if we look at 80, if we go to 20 lower, that's the 60 strike. It's trading at 4. If we go 20 higher, little negative skew in this sucker. Oh, 20 higher, sorry. Not a negative skew. So they are skewing this name to go higher as well. Here's the trade that I like though, guys. Because the skew makes the upside calls expensive, it's prudent to do a spread. And we want to do a spread where you're buying the lower and selling the higher. So however you do it, for example, let's say we did the 90s 105. The 90s, let's say it's $9 and the 105 is $5. That would be 90, what did I just say? Let's say it's $9 for the 90s and $5.50 for the 105s. That's $3.50 cost. And the most that you can make is the difference between the spreads. 15 points minus that $3.50. So doing it in my head, $11.50 of reward, $3.50 of risk if you buy the 90s and sell the 110s or the 105s. So I want you to do a spread either buying the 85, 90s, or 95s, one of those three, and then selling something higher at least $15 away. So 85, 100, 90, 105. Maybe you do the 95, 120. We're selling those higher calls to bring the cost down, but we could still make a shit ton of money if I am right about Temp following through to the upside. If you have any questions about that trade, watch it back. I made sure I was extremely clear. We also have different options. You can do the 85s, the 90s, or the 95s, and then $15 higher. We want to sell those calls. We're doing that to reduce the cost of the trade. These are the kind of trades we talk about all the time in our advanced notice program. If you guys want to try, investorplace.com/challenge 2025. For everybody in our community, there's one more biotech. I'm going to share that with you guys right when we get off. Thank you guys all for watching. I cannot believe we got the 200 likes. You guys rock. Thank you. Let's make some money on these trades, guys. Hey guys,